Friday at noon. If this is your first time joining us, my name is Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today we have with us Vox Royalty, VOX on the Venture Exchange, a mining royalty company. We haven't had the pleasure of hosting a royalty company in a very long time and are excited to hear about Vox's predominantly precious metals portfolio of 38 royalties and streams spanning 7 jurisdictions. The company has a track record of buying assets with significant near-term growth and development catalysts. Today we have joining us Kyle Floyd, founder, chairman, and CEO, and Spencer Cole, executive vice president. Welcome, gentlemen, and feel free to begin when ready. Thank you.
Yeah, thanks, Paul, very much for hosting us. And it's a privilege to be speaking with everybody today about Vox Royalty Co. I'm going to share my screen, if you'd give me 1 second. Terrific. Well, thanks again, Paul, and thank you for your team for organizing. We have a really interesting royalty story for your audience to learn about. We're excited to discuss what makes Vox Royalty Co. A very interesting company in the royalty space. And we are, what we like to say is we are a new story, but we are not a new company. We've been around since 2014, quietly building what is now the fastest growing royalty company on the planet. And we've been able to do that through acquiring IP and a team of experts in the royalty space that has amassed what is a portfolio with over 40 royalties, with producing royalties that's very precious weighted. And we are right now at an exponential stage in growth in terms of all facets, in terms of overall producing royalties, the quantum of royalties, and what will be cash flow to our bottom line. For many, royalties are a new story in the mining sector. And for those who know the royalty stories, royalty companies have outperformed any really commodity-based benchmark that you can compare a royalty co to for the better part of the last 20 years. That's physical, that is a basket of mining cos, that's even the S&P 500. Royalty cos have outperformed all of those benchmarks by magnitudes. And a lot of that boils down to royalty companies present some of the most interesting risk to return characteristics that you can generate in the commodity space. Royalty companies have an interest in the top line revenue of a mining company or a mining asset. And that interest in that mining asset, that revenue linked interest, is undiluted in perpetuity. And what that allows for is for the royalty company to benefit from all the upside that mining companies get, whether that's increases in underlying price appreciation of, say, gold, increases in reserves, or increases in production. The royalty co benefits from all of that significantly. But the royalty co is never on the hook for future capital. And that's a tenet of Vox, is that once we put a dollar in terms of purchasing a royalty, we never put another dollar into that opportunity. And royalties allow us to do that. So we're a much more significantly weighted opportunity in terms of upside, but with a lot less downside. And that's made the space very attractive for investors for now really the better part of almost 20 years. With Vox, we fully expect to outperform the royalty space. So meanwhile, the royalty sector has been a very significantly returner for investors for the last 2 decades. The first 3 years of a royalty company's life tend to be some of the most productive for shareholders that there is. We pulled up a chart for the 3 majors that probably most have heard of, being Franco, Wheaton, and Royal Gold. If you look at their price appreciation over the last, say, decade, it's been very significantly positive. And again, outperforming pretty much any real benchmark that you can compare them to. But what's very interesting to note is the first 3 years of growth for these companies, and also the most recent entrants in the space that came, say, a couple years before Vox entered the public markets, have on average returned more than 350% in terms of share price appreciation over those first 3 years. So with Vox, with the portfolio of opportunities that we have and the pipeline of opportunities that we have, at the deep value that we're buying assets, we fully expect to outperform the royalty sector very significantly over the next few years. Our team has been in the royalty sector collectively for almost 40 years. That is a very unique attribute of Vox and our management team that you don't find with any of the new entrants, and frankly, with some of the entrants that have come into the market over the last few years. Our team has spent the better part of our careers in the royalty space. We're passionate about the royalty space. We have combined more than $1.5 billion of royalty transactions that we've helped build, create, and sell. And we have a team that's very technically driven. So Spencer Cole is on the line or on the screen with me, is a mining engineer by trade. He leads up our North American efforts and has worked at some of the largest mining companies and has been one of the most quietly very significant people in the royalty space. Simon Cooper, our VP of Corporate Development, mining engineer and geo. He's worked at some of the most interesting mining opportunities around the world, from Central Asia to Australia to Glencore's operations in Africa. And then Rian Easterhuizen, who's based in Western Australia for us, really renowned geologist, having worked with some of the who's who in the major categories, leading their greenfield opportunities in the geology space. But this team is strategically located around the world to allow us to see as much deal flow as possible in the royalty space. And really what's a very, I would say, value add that our team brings to the table is that technical expertise at the front lines allows us to really find assets at a technical level and fundamental level that we really expect to increase in value over time. So it's not just that our team's able to find really interesting opportunities in volume across the world, is that we're also able to, with our technical team, evaluate those opportunities faster, with more efficiently, and with more accuracy than any of the emerging players in the royalty space. And as you'll see as we continue to move through our presentation, a lot of the assets that we've picked and we've chosen, we've allocated capital to on a very disciplined basis, have in fact developed quicker, better, and faster across basically any metric that yield a lot of organic growth within our portfolio. So we're not just about acquisitions, we're also about the growth of the acquisitions that we've made and picking those assets early on at a place where maybe others don't fully appreciate how good that asset is. The other thing to note is everybody on our team, we have 4 investment professionals that are working on business development around the clock, but we also bring in our general counsel and our CFO into that equation. So when you look at Vox, you have an engine that is built for growth and growth at value, and that is across the team and across the foundation of our business. As I mentioned, Vox is the fastest growing royalty company on the planet. That's bar none. That's everybody from the majors at 30 billion to the most recent entrants. Vox is the fastest growing business. But what's unique about Vox and our growth is what we like to say, most of our transactions are done on what's called a bilateral basis, meaning we're buying royalties directly from the seller of the royalty. Sometimes that's non-traditional holders of royalties. That can be a hearing aid company, a 3D printing company, a telecom company. We find royalties that others, one, don't know about, and in hands of sellers that are dealing directly with us. What that enables us to do is it means we're not just getting deals at top dollar. A lot of the growth in the industry has been done boardroom to boardroom in Toronto and Vancouver, meaning those royalty buyers are sitting down in processes run by investment banks, trying to bid up the value of the royalty to its maximum breaking point and selecting one winner out of a process of sometimes up to 5 or 10 parties bidding on that same royalty. We grow through on a bilateral basis, and that allows us to basically transact at better valuations for our shareholders. And so when you look at Vox, we are both growth and we're the fastest growing business, but we are also growth at the best relative value. And that's a very unique combination. Frankly, it's also a very rare combination that we deliver for our shareholders that we expect to be significantly rewarded in the market. Spencer Cole is one of the most distinguished people in the royalty space. We had the privilege of bringing Spencer and his business partner for Mineral Royalties Online into the Vox team. Spencer and Rian, many years ago now, started building what was acquired by Vox and was the largest proprietary database of royalties in the market. And that unique intellectual property has given us a significant edge in sourcing transactions. But Spencer, it'd be very helpful maybe if you could explain how the database works and how we create value with that database.
Sure, Carl. So from the ground up over the past 6 years, we built the world's largest proprietary royalty database. We built it from first principles, going through hundreds of thousands of public filings, tens of thousands of non-public private filings. We did deals with varying mining departments. In some cases, we even went through boxes worth of dusty records just to find any single reference to a royalty and then cross-check it against the underlying mining claims that it covers. What the database really gives us is two key competitive advantages. The first one is first mover access to deals. As Kyle mentioned, the overwhelming majority of our deals are done on a one-on-one bilateral negotiation basis. So no other royalty buyers even know that the deal is going on. So out of our last 14 deals since January of last year, 13 of our deals have been bilateral one-on-one negotiations. The second key advantage that the database gives us is due diligence speed. When we look at opportunities in our database, we view it through the equivalent of Google Earth, like what you see on the right-hand side of the screen. So the speed and time with which we can evaluate new royalty opportunities is a fraction of the time that it takes our competitors. Oftentimes, they don't even realize a royalty exists. And by that stage, we've already transacted with the counterparty. Just a brief snapshot on our royalty portfolio of 40 royalties. So we announced another deal last week to acquire a further 2. So the portfolio has grown from 38 to 40 in the last week. What you see from this slide is there's 2 key weightings in our portfolio. The first is in the pie chart towards precious metals. So approximately 2/3 of our royalties are over precious metal sort of weighted projects. And the overwhelming majority of that precious bucket is in gold specifically. And that's certainly a key growth focus for us, continuing to acquire gold royalties. The second key weighting that you see from this slide is towards Australia. That's really by design. Of our management team, of our investment professionals, of 4 of us, 2.5 of us are Australian. I say 2.5 because one's South African, but recently joined the dark side and got Australian citizenship. But as a management team, we've got considerable networks and experience in Australia. But also of our proprietary royalty database of over 7,000 royalties, approximately 20% of that royalty database is related to Australian royalties. And I guess from a geopolitical risk perspective, we view Australia as the tier 1 jurisdiction for mining, particularly for gold mining. The third point I'd raise from this slide is, as Carl touched on earlier, with Vox, you're really getting access to an exponential growth curve in not only number of royalties we're acquiring, but also just the stage of development of our royalties. So just organically, without acquiring a single additional royalty, we expect our number of producing royalties to increase from 2 to 6 over the coming 12 months. And those incremental 4 royalties are 4 gold royalties. So obviously that, from a cash flow perspective, that's just fantastic for all of our shareholders. Carl?
Yeah, thanks for that, Spencer. And as Spencer touched on, as I'll continue to touch on, our growth is exponential in all categories. And one of the most important categories is producing assets. We have 2 producing assets now. By next year, we expect that number to be 4, and that's purely organic, and then growing greater to 6. That is proof of our pipeline of opportunities in our portfolio. It's not just that we're buying interesting assets now, it's that the assets that we're buying have very significant development catalysts ahead of them. And we are able to get in front of really interesting opportunities at very deep value. And this organic portfolio, this organic growth for Vox really separates us from any of the new entrants and has us quickly approaching some of the entrants that have been in the public markets maybe for a few years longer than us. But we are catching them in terms of our growth, really in all the categories that matter for a royalty business. One of the things that's unique about our business and the fact that we are a relatively new entrant to the markets, having just gone public on May 25th, is we have built, for a company at our stage entering the markets, a very unique portfolio that's diversified, that's reached critical mass, that has brought in a number of really worldwide stars in terms of counterparties and the significance of their operations globally that are running our assets. And if you looked at any other company that really entered the markets as a royalty business, they would typically only have 1 or 2 counterparties that were operating their royalties. And our portfolio, having reached the critical mass that we have, is both diverse in terms of assets and counterparties. And that adds a lot of value for our investors in that we really mitigated risk while keeping such very significant upside. I think it's important for us to touch on a couple assets and how we acquire those assets and their significance to our business and to our shareholders. And so, Spencer, if you wouldn't mind touching on these three assets, I think it would be helpful for everybody online to understand why these assets are important to us, but also just as importantly, how we source these opportunities and how we create value in our sourcing process.
Sure, Carl. So the Cooley&Obbing royalty is a producing iron ore royalty. It's a 2% revenue royalty. Two interesting things about this deal were, firstly, we acquired this royalty from a telecommunications company, if you can believe it. It was a completely forgotten royalty that we sourced through our proprietary royalty database and through our networks on the ground. The second interesting fact about this deal was having a technically focused management team, 2 geologists and 1 mining engineer. We took a view very early on in due diligence that production was likely to be increased, and the size of the mineral resource was also likely to be upgraded. Sure enough, within 4 months of doing this deal, the operator of the project had essentially increased production by 50%, and they've got plans to increase it by a further 40%, and they doubled the size of the mineral resource. The second royalty in the middle is the Pedra Branca royalty, which is the largest undeveloped platinum group metals project in all of South America. This one was a fascinating deal, firstly because it's got a heavy weighting towards palladium, which currently sells for a premium to the gold price even. Secondly, it was it was formerly owned by the world's 3rd largest mining company. So it just came with a huge amount of historical geological data, which would yield further news flow and further development benefits. And then thirdly, it had an early stage vanadium exploration target on the royalty tenement when we acquired the royalty, which subsequent to us acquiring the royalty, the project was actually split in 2. So we acquired 1 royalty over this platinum project, but we ended up getting a second royalty for free over a very exciting vanadium discovery. And the third royalty on the right is the Bowdens project, which is the largest developing silver project in all of Australia. I guess we view this as a management team as really the best royalty call option in the market on the silver price, and a project that's actively being developed towards production.
Thanks, Spencer. The one thing I would touch on Bowdens and the power of the intellectual property that we acquired through the Mineral Royalties Online transaction was that we knew there was a royalty on this project held by one counterparty that we were actively in dialogue with to try to transact. And we were never able to get them to transact and pull the trigger on selling the royalty to us at a rational value. And when we acquired Mineral Royalties Online and Spencer and Rion and the database, we went to them and said, hey, can you help us, maybe through your Australian network, of finding a way to get a deal done with this counterparty because of the value of this royalty? We really want it. And Spencer came back to me and said, actually, Kyle, I can do one better for you. In our database, we show a royalty over this project that you don't know about, the market doesn't know about, held by a different counterparty. And within 2 months, we had a deal done with this other counterparty at much deeper value in our favor than we would have ever transacted with a party that we knew about and would have been more generally known about. And not only did they want to transact with us, they insisted on taking our stock, even in a private vehicle, because they had seen the re-rating and the share price appreciation of the 2 more previous entrants to us, and the return that generated for royalty holders to vend their royalty into a publicly traded royalty co. So there was immense value in the intellectual property and our sourcing networks that came to the table for us to buy this royalty at such great value and also contribute to our growth. Just a few very quick points on these assets and also how we found them. Ashburton was part of a portfolio that we purchased. It is a 1.7 million ounce gold resource on a very, very interesting, large and significant asset that was actually just sold by Northern Star to a counterparty. And so this asset's going to be moved forward on a standalone basis. We bought this at deep value compared to where it would trade at today, and really an elephant in our portfolio that in the next few years has potential to be in production. Dry Creek is an asset that we found also through the database that we were able to move quickly and transact on really on an under the radar basis. this royalty had really been forgotten about, was put in place in 1992. And we were able to bring that into our portfolio. It is both near-term growth and near-term production, but also very extensive drilling and opportunities for growth on that royalty tenement, and operated by a great counterparty in RNC. Now, IDA, if you can believe it, this royalty was acquired from a hearing aid company that held this near-term producing gold royalty that nobody really knew about. And through our deal sourcing networks, through our IP, we're able to bring that near-term gold production royalty into our portfolio, again, at deep value and deep discounts to the trading price that would have had and commanded in the Toronto market. So why Vox? And also why now? With Vox, you have a team of industry experts that have been in the royalty space for almost 40 years. We are passionate about royalties. This is an area where we have developed really as a complete team, significant domain expertise in royalties. There are new entrants in this space, but very few of them bring the depth of experience and the disciplined allocation of capital in this space for the better part of the last decade. And so with Vox, you have a team underpinning a lot of growth. It's really exponential growth. We've already achieved critical mass, and we're at this inflection point really for our shareholders, where we believe our share price will also reflect that organic growth and the acquisitional growth that we are bringing to the table. Vox has more catalysts in its near future and for the next few years than really any other royalty company. And that's underpinned by that growth, that's underpinned by the intellectual property and our team of experts that have more reach and more ability to bring in very well-priced transactions than any other royalty company in the market right now. And so when you look at Vox and you consider investing in Vox, we are bringing growth, which the market has really rewarded royalty companies for over the better part of the last 20 years. And we believe that we are going to outperform those previous entrants into the royalty space very significantly over the next few years as our deep transactional pipeline continues to come to the surface and we deliver that and bring that to the table for our investors. So thank you very much. And Paul, I will hand it back over to you.
Hi, Kyle. I'm going to go through a couple of the questions that we've been asked here. Let's start, and you may have mentioned this in your presentation, but if we could just review it. What companies are companies allowed to buy back their royalty?
Yeah, so a really good question. So there are some royalties out there that have buyback rights. And what we do and what really differentiates Vox is we buy already existing royalties. Most of those already existing royalties do not have buybacks. There are some cases, and I believe we may have one in our portfolio, but not over a material asset that has a buyback. But most, essentially none of our royalties have this buyback provision. Buybacks really come into play when a company is out there giving money to a mining company in exchange for a royalty, what we call an origination deal. That creates that buyback right typically. That overall is a deleterious or negative element to a royalty, but our portfolio by and large has no buybacks at this point.
Okay, excellent. Great company. Have you been approached by a major to be acquired? Your volume and liquidity is low. What is the ownership percentage?
Management, and that's actually a really good question, Sophie. Management owns approximately 15% of the business. And we are very driven by creating long-term shareholder returns for our investors. I can't really comment on behind the scenes market activity, but I will tell you that at our rate of exponential growth, our business projects out probably one of two ways. We become a very large dividend paying company when we no longer have this exponential growth curve and we're not able to grow as accretively as we are right now. And we then just become a very big, significant dividend play. The other alternative is obviously getting bought out by one of the larger royalty cos. And I think we are probably heading into a period of some consolidation in the royalty space. So there's always that possibility, but right now we're really focused on continuing to execute the business that's in front of us, which puts us on a faster growth curve than any other company in the industry.
Great. Oh, here. So we have a couple of the same type of questions. Very impressive presentation. How are your financials? How much cash do you have right now? And do you have any banking facilities for further investment?
Yeah, no, thank you for that question. We have about $9 million on the balance sheet right now. We raised $14 million in our IPO. We have a significant amount of transactional volume. So what we've talked about publicly is there's more than $500 million of royalty transactions that we're actively cherry picking the best of. And so, we're very well capitalized now. We will use a combination of stock and cash to continue to acquire royalties. A lot of the larger opportunities actually want stock in a high growth royalty business like Vox. So we will be able to stretch our current balance sheet very, very far for our shareholders.
Great. Are you guys backed by any household investor names in Canada?
Yeah, I mean, I think you have Euro Pacific and Adrian Day, who's been one of the, I would say, preeminent gold bugs, obviously in the space for a long time. And then, yeah, there's a general list of, some of the larger investment houses out of Toronto, and even worldwide for that matter, that have been exposed to Vox and bought both in the IPO and then also in the open market.
Okay. Has COVID impacted any of your projects?
Yeah, I'll actually let Spencer touch on that one if you don't mind, Spencer.
Yeah, sure. So I think with sort of circa 75% of our royalty portfolio weighted towards Australia, Australia has weathered the COVID storm exceptionally well. Like total cases were just over 7,000, and sadly, fatalities were about 100. But I guess in relative sense, on a per capita basis, and in terms of the disruption to Australian mining operations, it's been extremely negligible. So I think in terms of our existing royalty portfolio, we're obviously deeply empathetic about everyone that it's impacted, but we've been quite fortunate in that our operations that we're exposed to through our royalties have been relatively they've had minimal interruption. And then I think from a business development or new deals perspective, as Carl touched on earlier, our focus is really on acquiring existing royalties, not originating or creating new royalties. So a lot of our negotiation and due diligence is done sort of remotely. So from that perspective, we've been able to complete as much business development activity and due diligence, as we ever have, frankly, even during the COVID period. So the only slightly awkward thing was having to do our IPO roadshow through Zoom calls, which we were a bit nervous about, but the investor reception was, extremely strong. So we managed to get through that very well.
It clearly went well. Which actually, talking about due diligence brings me to my next question. What is the process to your due diligence before approaching a company?
Sure. So I guess, the two key things that we really focus on, one is obviously the quality of the underlying mining project or asset. And the other one is the quality of the actual royalty agreement that we're potentially acquiring. So on the first point, as we touched on, having two geologists and one mining engineer on our management team, we go through all the available data on a project. We look at drilling results, we look at all the engineering work, the metallurgy, essentially looking for the smoking gun that would essentially, determine whether there's going to be exceptional returns from that royalty, or whether we think there's going to be a fatal flaw that will ultimately sink that royalty. So everything we view is through a risk-adjusted returns lens. So we absolutely crawl through every bit of technical data to form a view around the actual quality of the underlying project, and then use discounted cash flow and a range of other valuation metrics to come up with a view on value.
And one thing I would add, Sophie, sorry, Spencer, to cut you off, but one thing I would add is in the royalty space, we actively turn down opportunities, probably, well, more so than anybody else, because of our pipeline, because of the technical expertise at the front lines of our business. We are better positioned to transact at deep value on royalties that we feel highly, highly confident are going to add not just good value, but great value for our shareholders, more so than any other royalty co right now that, many are competing over the same transactions and don't have the opportunity to frankly turn down the transactions that we do. So we turn down more deals because of our due diligence than anybody else.
Yeah. And I think, we've back tested over 500 deals over the past royalty deals over the past 40 years. And consistently, the very few losers in the industry have been those that don't have a technical team, don't have geologists and mining engineers analyzing assets. And so for us, that was an extremely important factor for our management team to ensure that, we're not just plugging numbers into an Excel spreadsheet. We're actually looking at, drilling results and whatnot. But
how large is your team?
So we have 4 professionals on the investment side of the business. So that's myself, the CEO, Spencer, EVP Americas, Rian, EVP of Australia, and Simon Cooper, Executive Vice President as well. And then from a business development and sourcing perspective, we also actively bring in our general counsel, we bring in our CFO, and then we have a network of agents that work on behalf of Vox really around the world. So for any companies, certainly under $1 billion, no one has a bigger sourcing team than Vox, and no one has a bigger technical team than Vox on the front lines of our business.
That's quite impressive. Paul, do you have any questions before we wrap up?
Just a couple. Are royalties transferable if a company is taken out? So if you own a royalty in a company and they're bought out, what happens there?
Yeah, that's a good question. And Spencer, if I miss anything, certainly jump in. But
sure.
It really depends, and having a team that's been so experienced like ours in the royalty space, you can do a lot of things right, you can do a lot of things wrong. The key is how you really how you acquire these royalties structurally and legally. And for some, it would be problematic. For us, it's not, in that we bring in our royalties in such a format that if a larger company wanted to acquire Vox, it would be a very easy acquisition.
And what's your most significant mineral in all of your portfolios?
I'd say we're most heavily weighted towards gold in terms of, if you look at, we're going from 2 to 6 producing assets. The next 4 incremental producing assets are all 4 gold assets. So, and certainly in terms of our upcoming deals that we'll be announcing over the next couple of months, they're heavily skewed towards gold.
Okay. And now one last question, and we'll let you go. Are the royalties based on a specific ore body? I mean, if you invest in a company and you take a royalty, they got a property, and all of a sudden they drill and they expand and they hit a big time. How does that work?
Yeah, no, that's a great question, Paul. And I think when it comes to royalties, the devil really is in the detail, as they say. So each royalty agreement is just a unique contract that ultimately references a different list of mining claims. So that's a key due diligence question for us that you just posed is, does this cover the main discovery, or does this cover the main, where they're drilling? And through our proprietary database, we're able to evaluate that in a fraction of time, because the reality is if the mining claims that the royalty covers, sit 50 meters offset from the actual discovery, you could go from having a royalty agreement that could be worth $20 million to being worthless, essentially. So it's linked to specific mining claims.
All right, thank you very much. Gentlemen, great presentation. This is a great story, especially with the price of gold cooperating lately, looking even better today, up about 10 or 12 bucks the last I looked. So again, thank you very much, Spencer and Kyle. Great story, and we will be following you very closely over the next short time.
Perfect. Well, thank you, Paul, and thank you, Sophie. We greatly appreciate it.
Have a great day, gentlemen.
Thanks, Paul. Thanks, Sophie.
Bye-bye.
Bye.
See ya.